So the U.S. regulatory system, I think, has proven effective at protecting consumers and encouraging competition for nearly 150 years now. It is a system that is evolving and improving, I think, primarily because it is accountable, it is transparent, and it is governed by the rule of law. Inherent in the notion of competitive markets and capitalism is the possibility of failure. We cannot be so risk-averse that we try to design a system to eliminate the possibility of failure altogether. Rather, policymakers should strive to develop regulatory controls that make the consequences of failure manageable. And in the U.S., that looks like the state regulation of legal insurance entities to protect policyholders. While I recognize that in other sectors or in other countries, there is a cultural or economic imperative to protect broader groups of stakeholders and an imperative to prevent failure altogether. Too often in global convergence discussions, the post-crisis effort to increase oversight of systemically important companies has bled far beyond that justification, with little consideration of the ultimate cost to consumers in creating solutions in search of a problem. Now, PCI supports efforts by the US, Europe, and other global leaders to work towards mutual recognition of each other's systems and explore how regulatory systems can be harmonized and streamlined. But I would suggest we need to thoroughly reach consensus about the underlying goal and solution before taking a set of rules from one regulatory segment and imposing it on another, which would be like mandating the same power cords in the US and Europe when the underlying electrical voltages are different. Other sectors or other countries' regulatory systems may very well work for their marketplace, but not necessarily be suited to the US marketplace. Nor do they reflect our commitment to competitiveness, to transparent proceedings, governed by the rule of law and an open administrative process, and to the ultimate benefit of consumers, as is illustrated by our guarantee fund system in the US. So the best regulatory regime for one sector or country may not be the best for another, just as the best competitive model and structure for one insurance company may not be the same business model for all insurance companies. A greater role for federal and international organizations, I think, threatens the creation of new layers of regulation on top of the state's existing regulatory architecture, and that all adds potential additional cost to consumers. So in summary, with respect to global regulatory convergence, while we welcome the efforts by the states, the federal government, and international leaders to improve regulatory harmony and mutual recognition, I would just caution that regulatory sameness, rather than harmony, is not an intrinsically desirable goal and may even enhance systemic risk.